All right, so today we're going to do something really cool. We've got our hands on the entire playbook from a trading AI for one single day. We're going to tear it down, piece by piece, and figure out how a machine actually sees the market. Let's jump right in.
I mean, that's the million-dollar question, right? How does an AI trade total chaos? You know, when the signals are all over the place and everyone's confused, what's its move? Does it have some secret insight? Well, today, we're going to find out.
And to make this super concrete, we're zeroing in on just one day, September 4th, 2025. So this isn't some abstract what-if scenario. Nope. This is the AI's actual battle plan, from how it sized up the market all the way to the specific trades and its doomsday protocols. So here's how we're going to break this down. First, we'll look at the fragile market. That's the AI's diagnosis. Then we'll meet the digital detectives, the AI's doing the work. After that, we get to the juicy part, the barbell game plan. And finally, we'll check out the automated safety net that keeps everything from blowing up.
Okay, let's dive into part one, the fragile market. I mean, first things first, right? Before an AI makes a single move, it has to size up the battlefield. So what's its take? What's the diagnosis for the day?
And the term it uses is controlled fragility. And what's so fascinating about that is the nuance, right? It's not just buy or sell, it's something in between. Think of it like this. The surface of the ocean looks totally calm, but the AI sees these massive, dangerous currents swirling just underneath. It looks safe, but it knows. It knows it could get ugly fast.
And here's the why. This is the data that's feeding that conclusion. And you can see the signals are just a total mess. They're pulling in opposite directions. You've got the crypto fear and greed index just sitting there at neutral, but then you look at actual investors and they're leaning bearish. And in the markets, options traders are buying protection, hedging against a drop, while the big money, the institutions, are literally pulling cash out of the S&P 500. There's zero consensus. And for an AI, that chaos is the signal. That's what fragile means.
Okay, now zoom in on this number, 16.29. On the surface, that's the VIX, the fear gauge, and it seems pretty low, kind of complacent, right? But here's the key. The AI is programmed to know that 16.5 is a tripwire, a critical line in the sand. So it's sitting just below that trigger. The whole system is basically on high alert because of this one number. All right, so the market is fragile. The system's on high alert. The question is, who's doing the thinking here? Well, let's meet the team. These are the digital detectives, the specialized AIs that actually crunch the numbers.
Yeah, this isn't just one big brain. It's a whole crew. You've got Cask, that's the long-term strategist, kind of the wise general. Then there's Dodos, the short-term specialist, always hunting for those explosive moves. Edge Nexus is the bomb squad expert, built specifically for these fragile markets. OmniProfit is the scout, tracking momentum. And then at the top, you have Alpacor. That's the boss. It takes all the intel from the team and makes the final decision.
And this team, they're not looking at everything. They're focused on 3 key assets, and each one has a code name, a specific job. SPY, the S&P 500 ETF, that's the anchor. It tells them what the whole market is doing. The Bitcoin ETF is the gatekeeper, a fantastic leading indicator for how much risk people are willing to take. And then you've got Tesla, the amplifier. You know Tesla. Whatever the market does, Tesla tends to do it bigger and faster. Okay, so we've got the diagnosis, fragile. We've met the team. Now for the main event, the barbell game plan. How does the AI actually plan to play this? What's the strategy?
And the strategy is brilliant. It's called the controlled fragility barbell. It's basically a two-pronged attack. On one end of the barbell, you have protect the downside. It's using SPY, the anchor, to buy insurance, put options, just in case the whole thing crumbles. But on the other end of the barbell, you have play for the upside. It's using Bitcoin and Tesla, the gatekeeper and the amplifier, to make some aggressive bets on a sudden pop. It's protecting its flank while still going for the win. It's ready for anything.
And these are the actual specific trades. No theory here. For SPY, the anchor, it's buying puts. That's a bet on a drop. Why? Because its data says the market is overbought, it's run up too fast, and big money is selling. For Bitcoin, the gatekeeper, it's buying calls, a bet on a rise. The reasoning? Volatility is cheap and it sees strong inflows. And for Tesla, the amplifier, it's also buying calls, specifically targeting what it calls an oversold bounce. Its momentum indicator, the RSI, is way down at 22.9, which is a huge signal for a potential snapback rally.
But look, this is maybe the most important part of the plan. How much skin is it putting in the game? Check out the allocation. The biggest position, at 3%, is the hedge, the defense. The upside bets on Tesla and Bitcoin are smaller, just 2% and 1.5%. So all in, it's only risking 6.5% of the portfolio. It's not betting the farm. It's a very precise, very cautious, but still opportunistic strike.
Okay, we've seen the offense. Now let's talk about the defense. And honestly, this might be the most critical piece of the puzzle, the automated safety net. What happens if the AI is wrong? What happens when things go sideways?
Well, it doesn't just hope for the best. It has a pre-planned, totally automated, escalating response. And it's all tied to that VIX fear gauge. Remember that 16.5 tripwire? The second the VIX crosses it, boom, a small hedge goes on. If fear keeps climbing to 17, the full hedge is activated. If it hits 18, it starts cutting its positions. At 20, it cuts them even more. It's all automatic. No emotion, no panic, just pure, cold logic.
And then there's the last resort, the break glass in case of emergency protocol. You can see it's written in all caps for a reason. This is the kill switch. And if the absolute worst-case scenario happens, the system has one simple, brutal command.
Flatten all long exposure. Maintain hedges. And the trigger for this isn't a vague feeling. It is surgically precise. If the anchor, SPY, drops below that critical $640 level, and at the same time the fear gauge, the VIX, is spiking over 18, that's the trigger. The system instantly dumps its Tesla and Bitcoin positions, sells them, but it keeps the hedge. It abandons the offense and goes 100% defense, no questions asked.
So there it is, a complete playbook, a totally logical, data-driven plan to navigate a super fragile market. It's cautious where it needs to be, opportunistic where it can be, and it's all wrapped in layers of automated protection. It really leaves you wondering, doesn't it? Is this the future of investing? A world run by cold, hard logic? Or is it just a shinier, more complex crystal ball? Something to think about. Thanks for digging into this with me.